Okay, welcome back to our section 1, which is overview of financial statements. In this section, we will be looking at the basic requirements, basic fundamentals of the financial statements. What are financial statements? Who are interested in financial statements? Why they are important? So we will be looking at all these concepts while we are going through the slides. So the objective of the brief introduction means the why, what are the financial statements. So the financial statements gives detailed information about the performance of company to all the stakeholders. So who are the stakeholders? The stakeholders are shareholders of the company who own the company's shares. It can be a general public, it can be the initial founders, it can be the prospective shareholders who are looking to buy the company's shares. There are company's directors and their managers, especially the senior managers, because their performance is linked with the company's performance, which is often the case. Their bonus, their salaries, their stock options are linked to the company's performance, company's overall performance. There are banks and suppliers who want to know if the company's credit risk is minimum, if the company will be able to pay. Customers, they are employees. So why these people are interested in financial statements, we will look at it in a couple of minutes. The objectives. So we need to think, right? So what are the objectives? So let's look at why these stakeholders are interested. So shareholders are interested to see if their investment is safe and is performing well. The company is performing well. Their value is increased. You might have heard a lot of CEOs. Their objective is to increase the shareholders' value. How the company shareholders will see that? So they will look at it from the financial statements. I mean, it's not, the financial statements are not the only way to look at it, but they can look at the market price, but this is one of the measure. The managers and the company directors, they want to see the company's performance versus their goals. They want to see their own performance. The banks want to know the companies have a good credit risk. They will be able to repay their loans. They will be able to pay the interest on time. Company's supplier want to know if the company can pay or will pay on time. So how they will know about this from financial statements? We will look into the details when we look at balance sheet and ratios. Can the company deliver its products and services consistently over a period of time? Because most of the companies, if they are heavily dependent on one company for their supplies, they would be interested to know if the company's health is good. Is the company have any immediate risk of closure? Employees are interested into their long-term prospects, right? So they want to know if the companies are going to perform very well in future, or if they have longer career prospects with the company. Now, before we dive into the details of financial statements, let's look at the basic accounting concepts so that we understand what are the basic accounting concepts involved in financial statements. We will look at it into the next video. Stay tuned.